investment, particularly in property and infrastructure, will drop even more quickly. And that should be terrible for iron ore prices. Now, when will that happen? We don't know. It could happen in 2 years, it could happen in 5 years, but eventually it will happen.
Did Presidents Trump and Xi have to make the deal they did last week?
I think both of them are in a tough position. Both of them want to minimize problems over the short term, but I don't think either really trusts the other, and I don't think either believes that what happened a couple of weeks ago is the end of the latest round.
And so how do you view China's weekend announcement suspending the ban on some exports to the US of gallium, germanium and antimony? Is it a further easing of trade tensions perhaps, or something else?
In the short term, yes, but ultimately, no. The US trade deficit continues to expand. The Chinese trade surplus, this month it contracted a bit, but it's been expanding so rapidly. And ultimately, until these things are resolved, the pressures aren't going to go away, and they're clearly not being resolved. We still have a long ways to go before this gets fixed.
How have the US tariffs on China already changed the nature of China's trade?
Very little. The basic theory of trade and trade tariffs is that you have to treat it systemically, not bilaterally. And I think many people in Washington understand that, but not everybody. And certainly Donald Trump has treated it bilaterally. So, almost a year ago, I told my friends in Washington, this isn't going to work. The deficit will continue increasing, and it has continued increasing. Until they can really change their strategy and get a better understanding of trade, I think we haven't really seen any real conflict yet.
The most recent statistics from China show a drop in the level of exports. Do you think that this is a blip or the start of something more substantive?
Hard to say. Eventually, we're going to see a contraction that'll be the start of something substantial. Whether that happened this month, or rather in the month of October, I don't know, because we've seen such rapid growth in exports that perhaps it was natural that there was a bit of a breather. But last year was by far the biggest trade surplus in the history of the world. This year, we're going to totally smash last year's record.
Is China moving to address its overcapacity, at least in some sectors, as a result of these trade tensions?
Yes, but remember that the excess capacity in the sectors that are now referred to as involuted were created for a very specific reason, and that is China can't allow total investment to drop. As long as it has a GDP growth target and it can't raise consumption, it cannot allow investment to drop. And so after 2022, when we saw the collapse in the property sector, Chinese investment poured out of property and into certain manufacturing areas, and that created the big problem. Beijing is now addressing that problem, those areas, but it hasn't solved the fundamental problem, which is that if you invest less in the involuted areas, you must invest more somewhere else. And there's really no other place that needs a lot of investment.
Can you briefly explain what you mean by those involuted areas?
Yeah, what happened was that the huge expansion in manufacturing that occurred after 2022 didn't occur across the board. Most local governments, in order to curry favor with the senior policymakers in Beijing, chose those sectors that Beijing was most in favor of. Solar panels, batteries, electric vehicles, things like that. And so resources poured into those areas, to the point where it was almost impossible for anyone to make money, and most people were actually selling below the variable cost. And that, of course, makes no sense at all economically, but it made a lot of sense politically, until Beijing stepped in around May and said price competition in these areas is so vicious and so harmful that we have to stop it. And so they're trying to move investment out of those areas.
In favor of what?
That's the problem, because China has an arithmetic problem. It's investing way too much. But if you have a GDP growth target and you can't get consumption to grow more quickly, you can't allow investment to grow more slowly, because together they add up to growth. And so what's been happening basically since 2009 is every time there's a problem in the economy, China ramps up investment in another sector. But they're overinvested almost across the board. So policy consists of trying to find out which sectors are least likely to be harmed by additional overinvestment.
China has long been aiming for economic self-reliance. Do you think it is only a matter of time until China's economy separates properly from the United States and perhaps the West as well?
No, it can't, because self-reliance, the way Keynes described it, is you produce everything you need and you consume everything you need. But China is heavily dependent on producing far more than it needs. It simply cannot absorb everything it produces, not because Chinese people don't like to consume, but because income levels relative to GDP are the lowest in the world, right? So a lot of people will say that if you were Chinese, you're consuming very little because you're thrifty. Nonsense. You're consuming very little because you get paid a very low share of what you produce. And that's the Chinese model. It's very efficient as long as wages are low. But as long as wages are low, it can't absorb everything it produces, in which case it needs the rest of the world to absorb the balance.
So we're sitting in Sydney at a big investment conference. What do investors need to recognise about China's direction?
One thing, which I think many people in Australia won't be very happy to hear, is that iron ore prices are extremely high, largely because China has the highest investment share in the world for it, as a share of GDP, and it needs urgently to bring it down, but it can't, right? As long as it keeps overinvesting, however, debt's going to continue to grow, and at some point that has to stop. When that happens, Chinese investment will drop much more quickly than Chinese GDP, and investment, particularly in property and infrastructure, will drop even more quickly. And that should be terrible for iron ore prices. Now, when will that happen? We don't know. It could happen in 2 years, it could happen in 5 years, but eventually it will happen.
Michael Pettis, thank you.
Thank you.